Okay, so it's 6 o'clock on the dot, and let's get this webinar started. Thank you to everybody that has joined. My name is Ridwaan Moolla. I look after the South African office for ThinkMarkets, and I'll be your host this evening. I'm going to be taking you through quite a bit about CFD share trading and what you can and can't do, strategies and everything else. But before we get into that, just some quick notes from my side. Questions, answers. If you have any questions or any comments, you're more than welcome to put it in the question and answer section. I will try and answer all those questions and answers either during the presentation or else I will leave it for the end. If you have any comments or anything, yes, there's also a chat. You can put it up there. I do have it open. It's on my screen. So whatever questions come through, I'll have a look at it. And if I feel I need to answer it while we're on the presentation, I will. If it's something which I'm going to cover a bit later, then obviously I'll leave it for later. Okay. But we will have a proper Q&A session at the end, and I have left quite a bit of time for it then as well. Okay. So what are we going to go through today? That's the big thing. First and foremost, just from an agenda, I know there's a lot of people on this call who have just heard about ThinkMarkets recently, so I thought it would be a good thing to show you who we are. Basically tell you, obviously, what ThinkMarkets is about and the fact that we're not just a fly-by-night company. We've been around for quite some time. So we're going to go through that. And then we're going to focus on what we all here for tonight. CFD shares. How does it work? The different strategies you can use. And obviously, the most important thing about trading, costs. How does it impact your trading and investment? And then last but not least, obviously, we're going to show you how to actually trade CFDs. I'm actually going to be going online and I'm going to be sharing my screen and actually placing a trade while we can. Obviously, it's not going to be in our local shares. It will have to be in one of our offshore shares in the US where the market is open. And then last but not least, why you should be with ThinkMarkets. Okay. So with all of that said and done, let's get into what we are here today for. So first and foremost, who exactly is this company called ThinkMarkets? So ThinkMarkets, well, we were established in 2010, so that gives us now almost 13 years being in this industry. It's a multi-award provider, I won't lie to you, and you can see all the awards that we've won on our websites. But the most important thing is we're here to offer you an online trading experience, online investing and trading. And it is one of the big things about ThinkMarkets. We are very, very committed to helping our clients become better educated and understanding how all these financial markets work. We have on our website, you will find massive amounts of education. You'll also find a lot of research. You'll find all of these type of things. But that's the thing about ThinkMarkets. We focus on helping our clients. We've won some very, very big awards. But I've always said the one award that always stood out for me has been the Customer Service Award. We pride ourselves in giving clients the customer service. So you can speak to us through various channels like live chat. You can call us or even email. And the nice thing that you know is that there is a human behind it all. It's not a robot, and we're there to help you. Okay. We have a massive global presence. We have 12 global offices. We are regulated and licensed in 8 different countries. We've, like I say, I mean, it's been a massive growth for this business. I mean, these are just some of the licensed entities that we have, from Australia to the UK. In South Africa, we're one of the most regulated companies. We have what we call a Category 1 license. We have a Category 2 license. But most importantly, in the derivative space, we also have what we call the over-the-counter derivatives license. So all of that really and truly means that as South Africans, you are very, very well protected. Also, all your money is held here in South Africa if you're a South African client, unless, of course, you want to take it offshore. We don't take it offshore, so we're not sneaky like that. All your money is here in South Africa, and obviously, if you have any issues, the FSCA is there to regulate. As the regulator is there to protect you as well. But as you can see, we're all over, and we're very, very proud of one of the international licenses also is that we have one in Japan as well. Okay. So we like to say we're always an award-winning broker, but what exactly are those awards? Are those the normal awards? So for example, you go on to Google and you say, who's the best broker and who's the top broker? And everybody claims to have awards and you've never heard of most of them. The nice thing of us, we've actually got awards from very, very reputable people. World Finance, these are just the most recent ones, by the way. World Finance found us to have the best trading platform, FX mobile trading app, best gold CFD provider. But like I said, the best one for me was the World Business one, which said best customer service provider. We also here in South Africa, which is the Intellidex Awards. We were second for the best CFD broker in 2021, but we were also this year the top active trader for 2022. One of the most important awards, if ever, there's been the City of London Wealth Management Awards, where they voted us the best CFD provider in 2021. So some really great awards, which are reputable awards, goes to show that, you know, this company is actually doing a lot. We're doing something really amazing, and we're going to grow further and further. So you know that you're dealing with somebody that is trusted, you know you're dealing with somebody that is reputable, and that is not just a company just set up a small little Mickey Mouse shop trying to make money as quickly as possible. This is quite a big global company, and it's recognized globally as well. Okay. So before we dive into anything else, we need to just be very, very clear. Do we all understand the difference between trading and investing? Trading, you need to know trading is for the short term. You should never be trading in an instrument and holding it for years and years, because you are not going to actually make money that way. Trading is for the short term. You want to hold something for maybe a week. You want to, in most cases, people actually trade intraday, while investing is where we do the long term. Investing is where we're going to invest for years. We're looking for good quality companies. The share price is not that important, in the sense that we are more interested right now that we're going to be investing in something that's going to be around for a long time, but it's also going to be providing me with value and growth over those years. And my investment is going to grow. It's going to beat inflation. It's going to make sure that over the next 10, 15, 20 years, it's going to grow and grow and grow. And it's going to help me towards my long-term goals. So we invest normally for minimum, I would say, is 5 years, but ultimately you should be looking more at the 10, 15, 20-year horizon as well. The nice thing, though, is that we are one of the only companies, in fact, right now, I think we're the only company that offers both investing and trading in so many different products. You can invest in the JSE, and that's in all the JSE-listed shares, exchange-traded funds, exchange-traded notes, but you can also trade in over 4,000 different instruments, and we'll go through all of them today as well. I mean, that includes FX, CFD shares, and a whole lot more, but we are going to get into that. So with that said and done, let's get into the most important thing for tonight, CFD shares. Now, the main reason for this webinar came about because of people like Salferi, Rochelle, and quite a few others like Nzizi, and them kept saying, listen, we have to do a CFD share webinar. And it just so happened that all of this was coming about, especially because the local JSE was just reaching all-time highs, getting above 80,000 points, which was amazing. So the big thing was, it was also the fact that, yes, we've got this wonderful bull market, but we've also had quite a bad 2022. I mean, the market really hurt a lot of investors. And the question is, how can we use these type of different instruments to protect our long-term investments, but also how do we use derivative trading to also contribute to our wealth creation? And that's what we want to go through today. So the first thing we need to start with is the basics. We need to start understanding how this whole trading in CFD shares works. So what is it that we need? That's going to be the first thing. In order for me to trade in the markets, I need to have a broker, and I need to have the knowledge. Now, those are two very important things. You need to be able to have a reputable broker. You need to be able to be trading with somebody where you know you're not going to be getting in any way ripped off, scammed, or anything else. You know that your investment or your trading account, you are protected. You know that your money is safe and it is secure. That is key. Make sure that any broker you deal with is properly regulated, whether that be for your investments, whether that be from a trading and derivatives as well. In fact, more so from the trading and derivatives side. You are dealing in a high risk instrument. Make sure that you do not have to still put your cash into further risk as well. The next thing is you need to learn. You cannot be expecting to just literally sit and say, oh, you know what, I'm just going to be on any platform and I'm just going to start trading and I'm going to be very, very wealthy come tomorrow. It doesn't work that way. The only way you're going to make money is if you know what you are doing. It's the same as if you go to a job. If somebody has to tomorrow say to you, fine, you're going to be the CEO of ThinkMarkets, and you don't even know what an FSP is, well, it's going to be a bit of a problem. You're going to fail dismally at the job, okay? And that's the reason why we say knowledge is key in our industry. And I've been in this for many years. I don't want to give away my age, but yeah, it's been more than 15 years. And I'll tell you this right now. I learn something new still every single day. It is one of the greatest and best industries to be in, but it is something which you've got to start off with knowing that it is an industry you're going to have to learn. You're going to have to understand, and you have to take advantages of things like these webinars, take advantages of going up, making use of social media accounts, following the right people like Rochelle, ThinkMarkets, ZA's, Twitter, LinkedIn account, where there's a lot of information being shared, but understand what that information means as well. Your knowledge is exceptionally important if you want to be successful. So the next thing is, what exactly makes all these markets really move? And these are the basics. This isn't anything new to anybody out there. This has been exactly what makes markets go up and down every single day. Things like your economic data. So GDP growth. What exactly is a country doing? Is the country growing? Is the economy growing? Inflation. I mean, that's been the hot topic for a few months now. We've seen interest rates rising, and that's because they are trying to curb trying to curb inflation. That is happening all around the world. Things like unemployment numbers are very, very important, because that also speaks to whether or not the country is doing well. Is the economy doing well? Are we growing? Are we able to provide employment? What exactly are we doing? In South Africa, obviously, one of the other big things that everybody's looking at is what load shedding schedule we are on. I mean, it's a crazy thing to think about, but yes, it does actually impact our economy. We're seeing it more and more, companies coming out with results, and what they speak about in the results is, yes, we've done well, but we've had a massive cost with regards to diesel, petrol, because those things need to run generators for these wonderful big businesses. So all of these things will impact how a company does. Then we have, like we said, the interest rate decisions. US especially right now have been looking at some very, very big interest rates increases. South Africa itself as well. In fact, we've got one coming on Thursday. So if we look and we see what is it that people are forecasting with regards to interest rates, is there going to be a massive increase, or is it going to be just 25 basis points, which is 0.25%, or will it be 50? If the market is expecting, let's say, 50, and they hike interest rates by 75 basis points, what will that do to certain shares in the stock market? Banks should go up. Other stocks may go down. You've got to understand what is it that is going to impact your investment as well as your trading as well, okay? Then, of course, there's always the geopolitical updates. The one thing that impacts the world no matter what. We all thought we were very well very far away from this whole thing of between Russia and Ukraine, but we very quickly learned that is impacted our stock market here in South Africa, and obviously it impacted every single stock market around the world. Ukraine is a massive exporter of wheat. Russia supplies gas, oil to Europe. So that little war, which, well, it's not that little, but that war has had a massive impact on the entire world. China, Taiwan, all of these things are going to impact us. We've just seen, I mean, if you look at our stock market over the last few weeks, we've actually seen massive movement in our resource sector. And the main reason for that is China actually ended its COVID pandemic, its COVID restrictions. So by doing that, China's opened up and said, okay, we're now open and we're now going to start focusing on growing and building our economy again. And that means they're going to start importing a lot of raw materials. So it was a massive benefit to South Africa. And that's when we started seeing a lot of our resource sector shares jumping in price. And today we're going to learn how we're going to benefit from that. And then obviously things like energy supplies. What is coming out of OPEC? How does that oil price impact us? Remember, an increase in the oil price impacts everybody. That means we're going to see petrol price increases, we're going to see diesel increases, and obviously that means it's going to contribute towards inflation. Inflation is going to go up because food prices will go up, everything goes up. When oil goes up, everything goes up. So we've got to keep an eye on these type of things. Okay. Last but not least, we have the actual market itself. And that's made up of what we call buyers and sellers. If there's more buyers in the market, the price goes up. If there are more sellers in the market, the price goes down. Simple economics 101. Supply and demand. If there's a huge demand for something, obviously, then the price will go up in anything. If there's an oversupply of something and the demand is very low, the price goes down. But ultimately, the markets trade in what we call three directions. We have what we call the sideways, trendless. It's just pretty much moving in one straight line, really. It's not doing much. You then have what we call the downtrend, and then you have the uptrend. That is literally the most simplest way you can explain a stock market movement, a share price movement, a CFD, oil, or FX, anything you're trading in. This is the only three ways it can move. It can't move any other way. And the thing is for us to understand which way it's moving so that we can benefit from it. And that's going to involve, yes, things like technical analysis, but it also involves fundamental analysis as well. Okay. But ultimately, this is it. There's nothing more or less you need to know about how the market actually moves. The thing now comes in is, how do we take what we've learned here so long and we start looking at applying it, looking at technical analysis, looking at fundamental analysis? What exactly am I going to use in order to understand and what we call read market movements? Okay. So now let's get into the CFD shares. What exactly is this whole CFD share? And why has the CFD shares become such a massive demand, I should say, for CFD shares in South Africa and worldwide? It has become, there's a bigger demand for CFD shares to be able to trade CFD shares than virtually any other instrument around. And one of the main reasons for it is that CFD-related trading and hedging offers you leverage and, most importantly, the ability to go short. Now, what is leverage? So leverage or gearing is the use of any given resource in such a way that the potential positive or negative outcome is magnified. Very nice sentence, very long and very nice high English. But what it really means is this, is that if, for example, I want to invest into something and trade into something, and they say you are geared or leverage is 10-1 or whatever the case may be, it actually means that for every 1 rand you put down, you are exposed to 10, 500, 20, 50 times, depending on what that leverage or gearing is. And that's your exposure. And that means that while you may be paying a lesser price, you are exposed to a lot more because of leverage or gearing. Now, the nice thing of CFD shares is that you'll find that your gearing and leverage isn't that high. So your exposure and your risk, I should say rather, isn't as high as potentially something like FX trading, which is of the highest risk, because there you can get gearing up to 500 times. And if you're new to trading, the first rule is start with CFD shares. Never just dive into FX trading. If people are selling FX trading to you to say, come and trade, and you don't even know what initial margin, leverage, or any of these terms that we're talking about now, this is the first time you're learning of them, then you shouldn't be doing anything in FX. You need to be in CFD shares. Okay. The other reason why CFD shares have become so popular is because of the fact that you have this ability to go short. Now, what does short mean? Shorting means that you actually make a profit when the price goes down. So in other words, the share price, let's say, is at 100 Rand, and the share price goes from 100 to 90 Rand, and you own one or you short one share, you'd actually make a 10 Rand profit. So you can make money when the share price goes down. Now, we're going to talk a lot more about this hedging and strategies, but shorting, a lot of people use that for hedging. And they use it for hedging purposes, and we'll explain to you just now how exactly it all works. But this is the most important reasons why CFD shares have become so popular. The other reason, which I've not put up here, is what you find is CFD share traders are also the most successful and the most long-term traders. Now, the reason for that is because it doesn't carry such high leverage like 500 to 1, where if you have that high leverage or gearing, you can literally make 1,000 Rand within a minute. But the problem is you can lose 10,000 Rand in a minute as well if you don't know what you are doing. So that is the reason why a lot of traders go to CFD share trading, because they know that they can over time pick up exactly what's happening. They're not going to just blow the account, as we say. It's going to take a bit longer for you to just lose everything you put in there. But it also means that you can also take the time to learn and understand how the markets work. Okay. So what do you need to know about it? So everything we've spoken about now, the only way and the best way to explain CFD share trading is by an example. So first and foremost, before, by the way, you get into trading, first understand investing. Understand what it means to buy a share and why I should invest in that company, or why I did invest in that company. So once you understand investing, that's when CFD shares come in really, really big time. So here's the first example. Trader A wants to buy a XYZ limited shares because they believe that this share price is going to rise. This is a good company to invest in and it should go up. Okay. They put 50,000 Rand cash into the share, and the share price is 100 Rand. So they therefore get 500 shares. 2 days later, the price is at 106 Rand and 75 cents. And the person sells to make a profit of 3,375 Rand. What that ultimately means is they've made a return of 6.75% on the initial investment of 50,000 Rand. Okay. Trader B says, I also have the same view, but instead of buying the share, decides I'm going to rather do CFD shares. So they take out what we call a contract and they enter the trade and they go long. Now remember, long means the share price must go up. So they enter the trade, which is exactly the same as that. However, instead of putting 50,000 Rand down, they only need to put what we call initial margin, which is a deposit. They only need to put down 10,000 Rand because the CFD is geared 5 times. And therefore, that means you only have to put down 20% margin. So for 500 shares at a price of 100 Rand, they need to put down now only 10,000 Rand. And they are going to be exposed to 50,000 Rand worth of shares. They do not hold the shares. They do not own the share. They are exposed to the price movement. CFD ultimately stands for contract for difference. And that means you make money on the difference of the price from where you go long or short, and depending on how that share price moves. But like we said, the gearing and the leverage is what gives you that benefit. So I'm exposed to the exact same amount as somebody who put 50,000 Rand and bought the actual shares. I've actually just done it, but putting down only 10,000 Rand. So the exact same thing happens in 2 days. The share goes up and there's a profit of 6.75 Rand per share. So I also make the same profit. Remember, I had the same exposure. I make 3,375 Rand. But the difference here is I'm making 33.75% profit because I didn't use 50,000 Rand. I used 10,000 Rand. So my capital outlay was 5 times less than what it should be because I was taking a trade on that. Now, that makes life very, 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 very nice, so long as it goes in your way. Because remember, if it went the other way, then your loss as a percentage would have been higher as well. So you have to first understand that this has risk to it, and you have to be able to manage it. And that's the reason why when I started this, I said, the most important rule here is understand. Knowledge is key to trading. So know what you are doing, okay? CFD shares, like I said, are leverage instruments. You are fully exposed to the price movements of the underlying instrument, but you don't have to pay the full price for that instrument. So they give you, they have the potential to make a much higher return from a very small amount of capital rather than actually investing directly in the shares. The other thing is, and we'll get to cost shortly, but the big thing here is, remember, you're not going to be paying high brokerage fees. You're not going to be paying STT. You're not going to be paying insider levy or anything else because you don't own the share. You are trading in a contract. Okay. So strategies, because that's the next best way to understand how it works. And one of the most important strategies with CFD share trading is hedging. And this is the reason why shorting became so popular, especially last year, and why CFD shares actually became one of the most popular instruments around. So how does this whole hedging work? So let's say you have a share portfolio and your share portfolio is worth 50,000 Rand. The problem is that your portfolio is actually now sitting and it is going down like it did last year. In 2022, you held shares in whatever company and the thing was plummeting, okay? Maybe you had FOMO and you bought Tugela shares and you bought it just before they were going to pay the dividend after they've declared it, and suddenly you're sitting really in a bad shape with it. What you could have done is, as you started seeing the share price drop, you could have actually gone and hedged your position, and you could have hedged it with a CFD share. So let's say you had 50,000 Rand worth of Tugela shares. You could have taken 10,000 Rand, put it into literally a CFD share, shorted Tugela, and on that short, you would be making a profit. So remember, like we said, if you look at the screen there, you can open a short position. So there Tugela was there. You then shorted. So it's going down. Now you are making money because you're in a short position, okay? Before it starts turning up again, well, you'll never really close at the low. So this is just a picture. Maybe you'll close this way, close a bit up there as well, okay? But the whole point of this hedging, what it means is you've offset your portfolio loss by making a profit on the CFD share. So if the share price was 100 Rand, and you had, like I said, 100 Rand in it, you bought it at 100 Rand, and then you realize, you know what, things are going a bit bad, and you short at 100 Rand, just for argument's sake. You're going to make it, and it goes down to 90 Rand, you're going to make a 10 Rand profit on your short. Your portfolio's made a 10 Rand loss. What that then means from a hedge point of view, you've protected your loss on your portfolio by making the profit on the other side. And all you had to do was take the profits and transfer it back into your investment account, and you would be sitting with an investment account, which is obviously balanced out. You wouldn't have actually lost any money. And that's the whole point of hedging. When things are going bad, we can hedge. When you have a very diversified portfolio, I always say to people, rather use CFDs on ETFs. So if you hold 15 out of the top 40 shares, Satrix 40, and it's the 15 most heavy weighted. So in other words, it's Naspers, it's Crosses, it's all of these guys, Anglo and all of them that are sitting in there in your portfolio. Then you don't need to go and hedge each individual share. You can actually then just short maybe Satrix 40. If you've got a very big international portfolio, which includes local, which includes your Apples, your Alphabets, Google, and all of these things, you can actually hedge using a CSP 500. So that helps you there as well. Okay. Now, all of this here that I've spoken about right now is about SA CFD shares. I've really used the SA CFD share market. With ThinkMarkets, though, you can actually do all of this South Africa or with international shares. We've got over 4,000 of them, and I'll get to that just now as well. Okay. And you can choose different base currencies that you want to use. So there's pound, USD, South Africa, but everything stays here, by the way. The money gets paid to you in rands, but I'll get to that all just now. Okay. But the thing that I just want to be clear on is the first strategy of hedging. Hedging, you use hedging to balance out your portfolio. A lot of people, like especially farmers in them, they actually hedge the currency. If they have wheat, you can trade in CFDs in wheat with us as well. But if they're a wheat farmer, what they'll do is they'll actually use the price of wheat, try to hedge it. If they think that that price is going to fall, and by the time they're going to harvest and sell their wheat, it's going to be quite low. What they'll do is they'll actually hedge it, and they'll buy a CFD in wheat, and literally come time to sell, when they sell it at a lower price, they've made the difference. So you've pretty much hedged yourself all the way through. Okay. And hedging is a really, really great tool, especially in volatile markets. It is really and truly something that can really help you to protect your investments and to protect even going overseas. You can even use hedging for that. So you can hedge yourself against the currency and say, listen, I think at 17 Rand to the dollar, guess what? That's brilliant. So what I'll do is I'll put in 5,000 Rand because I'm going to be using that to go overseas. If it goes up from 17 to 17.50, you're going to make a profit. When you sell that, you close out your position, you go to the bank, you take that profit plus the original 5,000 Rand, exchange it, and you're going to get the exchange rate ultimately of 17 then. Okay. So that's how hedging works. And hedging from a CFD point of view, use it. There are ETFs available on CFDs and everything, and I'll show it to you all just now. But you've got to understand that you can use CFD shares to hedge your portfolios. As I said, the most important thing is understand buying and selling, going long or going short. The most important thing on the slide that I need everybody to look at is that when you go short or when you go long, notice there are three things. There's your entry price, there's your stop loss, and there's your take profit. When you place your trade, these are the three things that you have to enter. Don't just leave it. Put your stop loss in. You can always adjust it. You can always change it. If it goes in your favor, you can adjust it either way. But you do not enter a trade without making sure you put a stop loss in. The other thing is put a take profit in. You never know if it will reach that point. You may literally be missing it out because you've got work, and I don't expect everybody to be looking at the market. That's what the take profit is there. So if it reaches a certain high that you're expecting it to, it gets there, it closes it out before the price comes down again. Okay. Or the other way around, it gets to the bottom, and before it starts going up, you take your profit if you're short. Okay. So you can go short or you can go long. But the most important thing on the slide is make sure you have a stop loss and a take profit. Okay. So let's go to the next strategy. And this is one of my favorite ones. We call it dividend stripping. Now, I love dividend stripping. And the reason for dividend stripping when it comes to CFDs is the biggest benefit here is you firstly get paid on X date. You do not have to wait till the pay date. The second thing is, this is what we call a manufactured dividend. So therefore, there isn't DWT. For those of you who don't know what DWT is, dividend withholding tax. Okay. So how does this whole dividend stripping work? What you ultimately want to try and do is you want to try and go long a CFD share before or on the last day to trade so that you qualify for the dividend. So today, if you follow ThinkMarkets, you would have seen that there were 2 shares in our economy in the South African market that were actually LDT, as they say today. If you held the share today, or you bought the share today before the market closed, you would be qualifying for the dividend. Okay. Dividend stripping, typically the way it works is it says the following. The market, sorry, if I just take a step back, the market itself works as follows when it comes to dividends. Okay. On what we call X date, so in other words, today is the last day to trade, I own the share. Tomorrow is what we call X date. Tomorrow, what should actually happen is the share price should fall by the dividend amount that was declared and that is due to be paid. For example, I buy a share and the share price is 100 Rand and the company declares a dividend of 5 Rand. What should actually happen is when they declare the dividend, the share price goes from 100 Rand, it goes to 105 Rand. It will stay at 105 Rand, let's just say, no market influence or anything else. And then come X date, it will go back down to 100 Rand. The whole point of that is because dividends are there to reward shareholders for their investments over time. Now, that doesn't naturally always happen. It will never, the share price will never just stay the same because from the time it declares to the time it goes X, there's normally quite a nice period there. And during that time, we have all the market turmoil. So when it comes to dividend stripping, what you're ultimately trying to do is find the nice little sweet spot of when to buy the CFD share to go long. Because what you want to do is you want to try and get in a bit lower than what it should be, but also at a price that it shouldn't fall by on X date. So if I were to do a CFD share, for example, like the one here below, if I had to go in and I said, right, let's just use BHP. These are just percentages. This is just an example. So please don't shoot me because the margin isn't 5% on BHP. But anyway, let's say the price was 35. Okay. I buy 100 shares at 35 Rand or dollars, which means my exposure, because I said it's 5%, my exposure there becomes 3,500 Rand. I only need to put down 175. It declares a dividend of 350. I get the full dividend. There's no dividend withholding tax here because it's a manufactured dividend. So I get the dividend of 350. If the share price does not drop below the price I bought it at of 35, that means I make an ROI of 200%. Whereas if I buy the share at the exact same price, obviously my outlay is going to be 3,500 Rand because there's no gearing involved. I get the dividend of 3.50 Rand, but then I'm going to have to pay dividend withholding tax. So the total dividend that I would have gotten on those 100 shares would have been 350, but I would have paid dividend withholding tax of 70, and that means I get a return of only 8%. That's the big benefit there. But just remember this. If you buy it for 100, at 100 Rand for argument's sake, and the share price drops to 90 Rand, and the dividend was 10 Rand, well, then you only break even. If it drops by more than that, then obviously you're making a loss. The other thing you have to always remember is that when you short a CFD share, and there's a dividend, so you may be doing this, like we said, for hedging purposes. But now, when there's a dividend being paid, and if you are short, you have to pay the dividend amount in. You're not going to get paid dividends. You're going to pay the broker dividends. Because At the end of the day, remember, you are short. You've technically sold the share already. So you don't own it, so you're not exposed to it, so therefore you have to pay for the dividend. Always remember that, okay? But dividend stripping, I love doing dividend stripping. What I do is I keep an eye out on any company results. I look at all the different companies, so I know more or less when the companies are going to be paying or declaring their dividends. And if I think the company is going to be doing a nice dividend, I look at the share price. If it's good value at that time, I go in. When it declares the dividend, it will go up. I hold it till X date, because on X date, you get paid the manufactured dividend. I don't have to wait till payday. Okay. It's a nice way to make literally some good money with dividend stripping. The point here, though, is you want to go in at a price and out at the same price. So you're not making money on the share price movement. You're making money on the dividend being paid. Okay. Then the last thing that we talk about is what we call index trading. And index trading, for a lot of us right now, is very, very volatile. There's obviously a lot bigger gearing to it. And we're not really the biggest fans of certain, of trying to get into index trading. The other problem that a lot of people have is when it comes to index trading is you need to understand trading and technical analysis. You don't need to understand the shares and everything else. You just need to understand more the technical side of things. But the other thing that people really don't like about indice trading is that the hours that they trade. So for example, the NASDAQ is trading now and will continue right through tonight. At some point, we do need to go and have supper. We do need to spend time with our family. And it's just, the times are a bit off. But the other thing also is that we have things like ETFs, which track these markets, but they're tracking these markets outside of when they open. The nice thing is that those ETFs actually track what has happened in the market and what they expect to be coming in the market. So they're tracking all of these type of things. So for those of you that don't like to do index trading, and index trading, some indices trade actually 24/7, as they call it. Well, not 24 hours during the market times. They normally close for about 2 hours at some point for pricing and adjustments. But that is actually going to be keeping you up quite a bit, especially if you don't have good tight stop losses and that in the market. If you want to get into index trading and you really and truly think it's something for you, and you've never done it before, look at the CFD ETFs. Look at things like Satrix 40. Look at core shares S&P 500. Those CFDs are tracking the S&P 500. They're tracking the top 40 index in South Africa. And so you can then trade those ETFs and you can literally then start understanding how indices work. Here in South Africa, yes, we've got from ThinkMarkets, you can trade the Dow Jones, the DAX, you can trade the S&P, the Nikkei, you can even trade the South African ALSI, or should I say the All-Me, which is a mini ALSI. But you're going to need closer to about, from a margin point of view, you're going to need closer to about 6,000 Rand for one All-Me contract. We don't all have that 6,000 Rand. So that's the other benefit as well of the ETFs. You can trade them tracking these markets, but you don't need to have that much. And I'll show you right now how much you're actually going to need as well. Okay. So with all of that, I'm just going back to things. This is really and truly where CFD shares play a really great part. You can use them for hedging. You can go short, you can go long. You can use them for dividend stripping. The nice thing, though, is that your gearing or your leverage isn't so massive that you're going to get blown out of the park. Many a times, and I'm not going to joke, but we always, myself, and in fact, I think Rochelle has heard me say this quite a few times, CFD share traders sometimes become CFD share investors. They'll go into an MTN and they'll say, this should be the bottom of it, and they'll go long. And then they'll end up holding it for 2-3 months. And well, it eventually obviously does come back. I mean, that's the point of the stock market. It will come up. And then they eventually close out with a profit. They forget about certain costs, which we're going to talk about now. But ultimately, for them, that's why we always say sometimes CFD share traders become CFD share investors. Okay. But you can hold this for a while. You don't have to be in and out every single day. You can keep it for a week, 2 weeks. Sometimes, I mean, I know people that trade on a monthly basis. There are other people that trade on a quarterly basis, and that's because they're hedging. From a hedging point of view, CFDs really make a lot more sense because you don't have to outlay so much of capital. Okay. So let's talk about something very, very important. When it comes to trading, costs are the biggest impact to anybody's trading account, even your investment account. This is one of the best ways to explain what costs really and truly can do to you. Okay. A simple investment, like literally over a 30-year period, where there is fees of 1%, 2%, and 3%. Look at the impact and look at actually what your return is. It is amazing as to how these things impact you. From a trading point of view, remember, it's magnified because you are geared and leveraged. So you have to be very careful of your fees. You have to make sure that you are using the right broker who has the right fees for things, especially when it comes to CFD shares. Okay? CFD shares, there's no complication to it. There's nothing really different from the offering from ThinkMarkets to another broker out there, like a standard bank even. At the end of the day, especially South African CFD shares, it is all of it, you are trading, the price is what is listed on the JSE. But you have to know, and you have to start keeping your costs down. We always, from the time that we started talking, I mean, myself, Simon, even Rochelle, all of us, we've always told people, if you are paying more than 2% as cost of your investment or trade, then you either need to increase your capital or you need to find another broker. So if you're investing 100 Rand and something is costing you 10 Rand, that means your cost is 10%. So 100 Rand is going to have to grow by 10% just to cover your buying costs. And then when you sell it, maybe it's costing you again another 10 Rand, which means it's costing you potentially, let's say it didn't grow, it's going to cost you another 10%. So just buying and selling without any share price movement has actually cost you 20%. You cannot be doing that. The whole point of online share trading and investing was to make sure that that brokers are able to provide clients with the ability to invest at a much, much lower cost. Because if you're paying that type of fees, then really and truly, you're not actually benefiting from what online share trading is supposed to be. It's supposed to be designed for people who don't have 1 million, 2 million Rand, but they want to grow to be having 1 million, 2 million Rand. And therefore, the costs have to be low as well. Okay. So the very first thing I want to tell you is what our costs are. Wide open. If you're trading South African CFD shares, you are going to pay 0.1% commission. There is no minimum. So we're not 0.1% with a minimum of 100 Rand. Okay. 0.1%. So if you buy a CFD share and your exposure is 100 Rand, you are going to pay 10 cents. There's no minimum on that. Okay. Our swap rate. Now, what is swap rate? Swap rate is what we call overnight funding rate. So remember, technically speaking, I'm hedging what you are buying. So I go in and buy the share in the market, which means then I'm technically borrowing you that difference. Okay. And therefore, for that exposure, I charge an overnight borrowing rate. So if you are exposed to one share, which costs 100 Rand, and you keep that overnight, that means you're going to pay a swap rate. Now, it's SIBOR plus minus 3% per annum. So it's 3 Rand per annum. So you've got to take 3 Rand divided by 365 days, and then you'll be able to pick up exactly what you pay per day in interest. So the interest rate isn't that high. SIBOR plus minus 3%. And why is it plus minus 3%? If you are long, you have to pay interest. If you are short, you receive interest. Okay. Then when it comes to live prices, so you get live prices, you don't get market depth, 5 depth and all of those things, but you do get free live prices with us. There's no dividend withholding tax on SA CFD shares. We don't charge monthly fees. We don't charge deposit fees. We don't even charge at this moment in time withdrawal fees. Okay. You can trade in over 120 SA CFD shares and ETFs. So CFD shares and CFD ETFs, you can actually trade on our with ThinkMarkets. And then we went one step further. And then we offered, right now it's actually closer to 3,000 plus. It's actually more than 3,000. 3,000 plus international CFD shares as well. The international CFD shares include your usual Apple, your Google, all of these guys overseas. Okay. We don't charge any commission on that. But as you are well aware, if you buy even a share with regards to the US and that there, the brokers mark it up. So they say 0 commission, but in actual fact, the price is marked up. Now, what do we mean by that is, let's say Apple is $100. What will happen is when you buy it, you're not going to see $100. You're going to pay $100.10. That 10 cents is actually where the commission is. On SA CFD shares, you do not get any of that markup. There's no markup like that. The price you get is what the bid and offer is from the JSE, and you can compare that. Okay, that is what the JSE is offering. With that, with the international CFD shares, there's a slight up on the price, and the price includes what we call a fee. Okay, and that's roughly actually about 0.05%. You can actually have a look at it. All right. The swap rate is also plus minus 3%, but now it's dependent on the market. So, for example, the UK used to use the LIBOR rate. The US has a different interest rate as well. But that's the benchmark rate. Like South Africa, we use SIBOR. There's also SAFI. Those different interest rates, but it's pretty much exactly what your prime interest rate is. Okay, and then your plus minus 3%. Live prices again are for free. Your international CFD shares, except for the UK. So the US, you will pay a dividend fee of 15%. Right? No way getting around tax, unfortunately, on the US. They just try and tax everything. Okay. So that just shows you that there's some benefit to trading in the South African market and being a South African. Whereas in the US, yeah, they're just charging us for everything. But yet again, there's 0 monthly fees, 0 deposit fees, and 0 withdrawal fees. So those are your costs there. Okay. There's no brokerage on top of this. There's no anything else on there. There's no other hidden fees. I'm here literally telling you exactly what those fees are. Many brokers out there tell you 0 commission, but they forget to tell you that the bid and offer price, well, we've actually got a markup in it. Then you have the other brokers which have a 10-page document on fees. And majority of clients who are trading SA CFD shares right now are all trading and they're getting hit with a minimum of 120 Rand, which means if you're trading and your exposure is 1,000 Rand, well, and you're paying 120 in fees, just remember what I said. Work out the percentage as a cost. It starts adding up. And it starts hurting. In fact, you're going to have to go, on most occasions, so long as your exposure is above 50,000 Rand, that's when you're pretty much going to start clearing that minimum. Okay, so just be careful of that. There's a lot of brokers out there with the minimum. SA CFD shares are the best thing to start trading. If you're going to go into trading, start with SA CFD shares. You know the companies. But the best thing about it is the fact that you are paying the price that is shown, that is in the market. The bid and offer, which is what the market makes. None of us, us actually are the ones who make the market, depending on our bids and offers. That's what you get with the CFD share. Okay. So how do we trade? Okay, so this is where Ridwaan has to now go and log into his little account over there. So I'll pull it up on the screen right now. I'm just going to be typing in all my wonderful secret information. and ticking that wonderful box that says I am human. Never quite understood why websites do it, but apparently it helps. Okay. Right, just moving it across. Okay, let me know if you can, just by a quick raise of hands, can everybody see the wonderful ThinkMarkets web trader app? Lovely. Okay. So the big thing is, how did I get to this thing? Well, it's actually quite simple. Literally what I've done is I've actually gone to thinkmarkets.co.za and I clicked on this wonderful thing, and clicked on client login web trader. If you have an account with us, a Think Trader account with us, you can actually access this entire platform on the web. The platform at this moment in time is only available for people with a CFD account. Your share account is still only available on app, but we're getting there. Okay. So right now, this is a bit of a test account, which is not doing too shabby. What I've done right now is I've logged in. The first thing, obviously, that you need to do if you're a new trader is you need to fund. Once you get here to this screen over there, on the left-hand side, it says fund. You can then go to funds. It'll then load the deposit screen. And you can then select whether or not you want to deposit using your credit or debit card or e-wallet like Ozo. And if you use these options over here, your money is immediately allocated. So if you deposit literally right now, even if you use Ozo or anything else, your money will be allocated immediately into the account. Bank transfer, obviously you have to transfer to us. That's our bank account in South Africa. We with that blue bank, unfortunately. No comment. But yes, you can transfer your money through to there. It gives you the account number and everything else. Just remember, if you're from another bank, it can take 2 to 3 working days. I'm not too sure exactly how long it sometimes can take. Okay. So let's go back to trading. Okay. Plain and simple. What I've actually got over here at the top, this is my watch list. That's the default watch list over there. So you can see all the different markets you can trade in. You can then create your own little watch list like I have. You click on create watch list, but alternatively, I've got what we call a CFD share watch list. I've got my South Africans, the MTNs, the Tegelas, Sasol. The one thing you'll notice is, for example, this is gold. This is the price of gold. You can trade obviously in gold, but you'll notice that it's right above Goldfields. And that's because that gold price obviously impacts the price of Goldfields as well. Here's Apple. There's the core shares 500 S&P, the Satrix 40. I'm a big fan. I know quite a few others are. They love trading the CFD Satrix 40 instead of trading things like the Aussie, because it's during market hours. Once the market closes, you're done. You wait till the next day. Okay. And then I've got this guy over here. If anybody's been on any of my shows with Rochelle, you'll know that Redefine is still one of my favorite shares. And yes, that's actually where dividend stripping comes in. Redefine pays good dividends, great share for dividend stripping. Okay. So how do I place a trade? Well, it's quite simple. I can either go from here where I can search for an instrument, and there you can see the number of instruments all over the place here. So I can literally type in any instrument I want. Let's take Apple. And literally there's Apple over there. I click on Apple. And as you can see, the little box over here is the one that will be showing me Apple. By the way, these graphs, you can actually do all of these funky things with it. So I can do that. So I can have one graph over there. I can just click there again and it'll take it back. The other thing I can do is I can actually take all of these graphs and put them on another screen and have them all individual, as you can see over there, nice and big. And obviously you've got all the technical analysis. I've never ever in my life seen something with such technical analysis available to you. All your indicators are there. You can draw, you can do whatever you want in this thing. Yeah, you can change it from one day, you can go minutes, you can go 1 week, whatever the case may be. You can obviously go from line, candlestick, everything else. Okay. And then comes even more fun. I can then go detach each one of these graphs. So I can make that a full screen. And then if I've got 6 screens, I can put each one of them on each one of those screens. Okay. And all I'm doing is clicking there at the bottom, as you can see, those 2 little arrows. in order if I want to go back to anything over there. Cool. So let's close that down quickly. Now, if I want to buy Apple, I hit the buy button. If I want to go long, if I want to go short, I obviously hit the sell. Okay. So let's just say Apple, I want to do a trade in it. Lots, pretty much that's the number of contracts that I'm looking at. So if I'm looking at 0.1 of a contract, that's my estimated margin over there that I'm going to use in rands. It converts that price to rands. Okay. Because I have a ZAR account. If you want a USD account, you can have it, but just remember your money's still in rands. Okay. Set up my take profit and stop losses. As you can see, it gives me defaults. I can change that, hit the plus, hit the minus, whatever the case may be. Okay. When I'm ready, I can go confirm buy. Gives me all the information. Oh, sorry, one more thing. I just wanted to show you something. When I'm actually placing a trade over here, there's a little I button here at the top. If I click that information, it's going to actually tell me the currency, the product type. It's going to tell me what the spread currently is. Remember, this is the market, okay? This isn't like FX. But it's going to tell me the margin requirements, what its swap rate, short rate in actual points. So the swap long, this is what you're going to be paying per day, and that's actually in cents. So it's 0.269 cents. Okay. So you can actually see this, the daily, what you're going to be paying. All right, let's click away from the, damn it. Anyway, so that's what I want to do. I want to now go and place my trade. So let me just do it again. There's everything in there. And I hit confirm buy, place the order. There's my order. I'm now in a CFD of Apple. As you can see, I also have clicks over there, but you'll notice something on clicks. I did not put in a take profit or a stop loss, but I can add that. So I can go in and say, hey, wait, I want to take profit. I want a stop loss as well, whatever the case may be. Confirm. It'll update that there when the market opens. Market is closed, so you can't edit that. And that's important to understand. Apple, the market is open. I can edit this. Okay. Can change it a bit, confirm order. There you go, it'll say updated. If markets are closed, it'll always give you the error message there on the top. If I want to close out my Apple and that there, I can hit the X button. I can obviously, if I don't close it out and I go sell, it's going to open up a short position. I'll then have a long and a short position. Okay, so remember, you've got to close out your position. So let's actually look at that. I hit close position. Brings up the ticket to say, what do you want to do? I hit the close button. Boom, I'm out of Apple. That's how simple it is. Pending orders will be there if you have any orders in the market, like a limit order that is still waiting to be matched. Close positions, it'll always show you close positions for today. You can change it to the last week. You can change it to the last 3 months. As you can see, there's quite a bit there. So you can change, you can then see all the orders that you've placed as well. What's your P&L, everything else. Okay. The other thing is you can also switch on what we call one-click trading. For those of you that are brave enough to do one-click trading, feel free. As you can see, my watch list just changed very, very nicely. And if I were to hit that button, so I'm going to do it quickly. Thankfully, it's closed. The minute I hit the buy or the sell in one-click trading, that order goes straight into market, as you can see. Okay. If I do it on Google right now, that order will match. So please be very careful. I'm not a one-click trading person. I rather like to confirm what I'm doing. And then you've got dark mode and light mode. Cool. And then the favorite thing that I have is this over here. It's called markets. There's your risers, your fallers, your most volatile, the commodities, ETFs, CFDs. So you can see the whole list of them out there. Which ones you want to track. If you own some of these, like you own MSCI iShares, and you want to hedge yourself, you can now. So you literally don't need to then go and sell your entire ETFs. You can rather hedge yourself, and you can hedge them with local and international ETFs. That's how easy this is. That's the reason why CFD shares can be so popular. By the way, here's all the wonderful news items in that there, as well as what's up and coming. This is from Trading Central, which you can access also from your client portal. But yeah, that's pretty much it. I mean, it's quite an easy to use platform. And as you can see, we bought some share and we sold the CFD share. Clicks, on the other hand, as you're well aware, I think, if I'm not mistaken, today was LDT. So hopefully tomorrow I'll get my dividend. I own only one though, so I should get one dividend, but I don't pay GWT on it. Right. Cool. I don't know if there's any questions right now. If you do have anything, let me know before we just close off. I'm going into the last part of this here. But if there's any questions on anything we've spoken about so far, please feel free, pop it through, and I'll see what I can answer in the meantime. Okay. I see, Matthews, you've asked which currency can we trade in. I hope I've answered that for you. You can trade in, you can have a base currency of USD, pounds, euro, or ZAR. And obviously, the money's not taken offshore, so it's kept here in South Africa, so it doesn't impact your offshore allowance. It's just the system will show you your profit and losses in dollars. Obviously, when you withdraw it, it will be withdrawn in ZAR. Okay. Secondly, you can trade with a ZAR account. You can trade obviously all these different CFD shares. Okay. So somebody asked me this before the webinar. They wanted to know how good has our research in that been. I actually went back to a presentation we did last year where we talked about a bit of CFD shares and FX and everything else. And one of the things that we pulled up there was Capitec, and there was a thing to say, go long Capitec. And this was the whole thing on the top. They oversold territory. This was in September the 8th, by the way. So it showed year to date what it had done, 1 year performance, all of these type of things, where we set the entry point could be. Remember, this isn't advice. This is what we're giving as information. This is what we're thinking is good. And from a research point of view, it was just good to show you that, the research is good. Listen to it, read up on it. Take this information that we're giving you as your starting point to make a decision as to what you want to do. But anyway, so we did it. Had you followed this, you would have entered at about 1,500 Rand, which is what we put it down as. That was stop loss. Target price obviously was well above there. Right now, Capitec is obviously over 1,000. Well over 1,900 Rand. The other one we did was Impala Platinum. Well, this obviously just blew everything out. But it was based upon what we thought the platinum price was going to do, going up, obviously. And obviously that is what did happen. So some good information, make use of it. Just go to the website and use the research over there. Okay. But from today, and I'm not going to keep you much longer, the trading key takeaways. Learn, and learn again. Don't be afraid to pay school fees. What is school fees? So school fees is when you make a loss. If you're trading CFD shares, you'll find you'll never really make a loss, or never make a big loss. But the most important thing is to understand that when I do make a loss, what happened? What went wrong? There's also a flip side to that coin. When you make a profit, how did you do it? And be honest with yourself. If it was pure luck, say it was pure luck. I better, that luck's not going to carry on. Okay. Success, trading is for the short term, but results come over the long term. What we mean by that is you can't just go in and trade today and at the end of the month expect to be a millionaire. You're going to make losses along the way. You're going to make profits along the way. The point is to minimize your losses, maximize your profits. If you're new to trading, start with CFD shares. And like I said, preferably, please, SA CFD shares. You know the companies. You must probably investing in the companies already. Costs, the biggest impact is to any trader success is cost. If you're paying, for South African CFD shares, like I said, there is no difference in the offer between us and anybody else. Find who is the cheapest, literally, because you'll find that we all offer really, truly exceptional value. Maybe some offer better service like we do because we've got an award for it. So like I said, my prouder one. That's still what I'm very proud of. But look at your cost. With us, you're paying 0.1%, no minimum. If you trade with another broker, there's a very good chance you're paying 0.25%, 0.35%. You're paying 0.25% plus something, maybe brokerage, withdrawal fees, monthly fees, this fees, that fees. It all adds up. So why are you doing that? Why don't you just pay 0.1%
and you're still getting access to the market, you're still getting the same price, you're still getting the same swap rate, but your fees are more than half, okay? So please, guys, watch your costs and think about it. What can you do with the ThinkMarkets? Well, with us, actually, you can do a lot. As you saw on the web trader, there's over 4,000 financial instruments listed. You can do Forex, you can do cryptocurrencies. These are all CFDs in cryptos. These are not physical cryptos, okay? So you're not buying a cryptocurrency with us. You're trading in the price movement of the underlying cryptocurrency. You can trade in all the major indices. You can trade in commodities. You can do share CFDs and ETFs, and obviously ETFs on indices. You can trade in all the metals, gold, silver, and everything else. So if you're thinking gold is going up, or if you have an ETF, for example, let's say you own a gold ETF, and which is new gold, obviously, and you own new gold ETFs, and you have a lot of money in it, and the price of gold started plummeting, that was the perfect time for you to go short on gold. Balance and hedge your investment. Okay. You can go long or short with every single one of these instruments as well. The other thing also is, which I know we never really covered, but you can also invest with ThinkMarkets. There, in order for investing, and this is where you actually own the physical share and you own the physical ETF, you can do that via a share account. Your brokerage there is 0.25%, but there's a minimum of 30 Rand on there. The difference though is you get access to live snapshot prices. You get access to a lot more research. There's graphs, there's obviously all the technical analysis and all of these type of things, okay? If you want an investment account, all you have to do is open a share account. If you want to trade in CFD shares, open a CFD account. The share account is available only through the app, whereas the CFD account is available on app, on the web that I showed you as well, on tablet. The share account, like I said, is only on app, which means it's only available on your phone or on your tablet. Okay, but it's really cool. It's really easy to use. I promise you, the way I did a buy and sell on the CFD share is exactly the way you do it on your normal share account as well. Okay, and the difference here is you get access, like I said, to a live snapshot price, so you know exactly what you're paying for. We don't charge you for live snapshot prices; they're free for you. We don't also charge you for research. All the research is free as well and is available on ThinkMarkets website. Alternatively, follow us on the social media platforms. Okay. So guys, I want to close with this. Please start your investment and trading journey. Start it now. Stop using the excuses. The market is at a high. Everybody at the beginning of this year said, oh, wait, the market's high, it's going to fall. I hate to give you bad news. We just hit over 80,000 points on the SA market. Okay. Then we have the whole thing, oh no, the market's going to start falling. So now we've reached the high. No, the market's going to start falling. I'll wait till it falls. You're never going to get in at the low. The point here is try not to get in at the high, but you're never ever going to time it so perfect that you'll get in right at the bottom of the market. So when the market does that curve. Okay. The month is a tough month, January. Okay. I know it's a tough month, but you should have already budgeted for this. We should have budgeted. We should be right now, at this moment in time, putting our future dated payments already, no matter what, for this whole year. From January, the end of this month, we're getting paid. Have a future dated payment going into your investment account, to your share account. Okay. Have the money going into your trading account. If you need to go into if you want to go into CFD shares, have that loaded up front. So when you get paid, the money is literally taken away. Stop waiting for hot tips. You're never ever going to get the right hot tip. There is nobody out there that's going to really tell you the truth. And last but not least, the one I love. No, I'm busy sorting out my account. Guys, there's nothing to sort out. It's normal FICA documents. It's the documents you use to open your bank account. It's the documents you've used to get a home loan. It's the documents you used for car finance. It is the documents you have. You get this. You get your rates and taxes. You get, in fact, with us, we even make it simple. If the address you live at and your bank account statement has your address on there, we'll accept that even as proof of address. And it's a copy of your ID. Literally, whip it out if you have a smart ID, take a picture on your phone. While you're applying for the account, you get to that. Stop using excuses because you want to procrastinate, okay? The problem is you're missing out. Warren Buffett made a very great statement when he was interviewed, and I always say this. When they asked him, when did you start investing? He said, I started investing at the age of 11. And everybody went, wow, are you serious? And he said, yeah, I started 11 years late. What he meant is, not that he started at the age of 11, but the fact of the matter is that he started 11 years late, meaning he had lost 11 years of movement in the stock market, an opportunity to make money in the stock market. So stop procrastinating, okay? So with that said and done, if you have any other questions, I've hopefully answered most of them going through the presentation that I still come through, but if there's anything I haven't answered, please go right ahead. You can pop it up on the question or on the chat session, and I'll hopefully try and answer it for you. Cool. Okay, so with that, I know I have gone a bit over time, so I do apologize. But if you have anything that you want to still, if you're still thinking about it, please, you're more than welcome to contact us. Just take a picture of this QR code. Alternatively, just go to thinkmarkets.co.za. And if you go on that there, you can click on the live chat and you can have a chat with somebody. We do offer 24/7 customer service with a human being. For those of you that want to know how to get the app, you can just download the app. You can literally take a picture of that. Alternatively, just go to any Google Play or App Store and type in the words Think Trader. It's the one with the light bulb. And you can actually then just download it there as well. Okay. Last but not least, we are a financial services provider and a licensed financial services provider. So we have to always put in a nice disclaimer. And the disclaimer here is actually to protect both you and me. And ultimately what this entire disclaimer says is, everything we've spoken about today, we've used things for example. In no way have I told you to go and buy or sell any instrument. They're there for example and illustrative purposes. Okay. Again, think markets, nothing to hide. That's the reason why I don't mind telling you what the disclaimer covers. Obviously, it carries the usual risk warnings as well. Derivative products are leverage products. Understand it. Know that you can lose more than you actually deposit. You've got to be very careful of that. As much as we try, we do have things like, for example, we close out your portfolio when you've used 50% of your margin so that at least we can protect you a bit there. But sometimes the market can go right through that whole thing. Literally, it can close at a certain price and the next day open up so low or so high that it's jumped through your stop losses and everything else and your margin, and that can put you in trouble. So be very careful of that. Understand what you are trading. But please start your journey with CFD shares. Trust me, you'll thank me later. Okay. Ladies and gentlemen, thank you very, very much. I hope you have a very, very good evening and the rest of the week. And we will definitely be catching up soon. Please keep an eye out for any other upcoming events. If you follow Think Markets ZA on Twitter or on LinkedIn, even on Facebook as well, you'll see anything up and coming. And I will close with one thing. If you are a Liverpool fan, actually, if you're a football fan, you don't even need to be anything else. If you're a soccer or football fan, go to thinkmarkets.com and enter. There's a competition. You can stand a chance. You've got to have an account with us. You can have a share account or a CFD account or both. Enter the competition to win 2 tickets live at Anfield, and you'll be able to watch Liverpool versus Arsenal. Those are really amazing tickets, and it's obviously an amazing stadium to go to. Yes, I am a Liverpool fan, but that's not the reason. Every other person loves it as well. So please, if you really and truly are a football fan, go onto the website, enter the competition, and who knows, maybe you could be watching Liverpool Arsenal live at Anfield. With that, thank you very, very much, and we will chat soon.